Okay,
Okay.
so quick financial disclaimer. The information provided here today is for general informational purposes only and does not constitute financial, investment, tax, legal, or other professional advice. You should consult with a qualified professional for personalized advice tailored to your specific situation. Any reliance you place on such information is strictly at your own risk. Past performance is not indicative of future results. We are not responsible for any financial decisions or actions taken based on the information provided. Hi, everyone. Today we're talking to Ankit Desai, a friend who is the co-founder of Pocket Labs, where his team develops high-quality iOS, Android, and web apps. He's also been a long-time crypto investor through the many ups and downs of that movement. Uh, really relevant today with the price this week of crypto, of Bitcoin specifically, going over $100,000. And today we really want to talk to him about his initiation and subsequent involvement in the crypto community. So let's dive right in. Ankit, welcome to the pod.
Yeah, thanks for having me.
Excited to kick this off and talk to you about it because I know you've been one of our friends who's been in crypto the longest, I would say, and kind of the most long on it. And so maybe we could just like rewind and start from the very beginning. Like when did you first, hear about or foray into Bitcoin and crypto in general, and what prompted you to dive in?
Yeah. So I started in 2017. I was doing a lot of like online sports betting. So like before DraftKings and FanDuel and all this stuff made it super easy on your phone. You had to like go to some, you know, shady-ish websites to place your bets, and they would charge you like pretty exorbitant fees to deposit money, especially with credit cards. So
Mm.
the place I was betting was gave this promotion where they're like, hey, if you deposit crypto, we'll let you bet. Like there'll be no fees, right? So you can just deposit crypto, and you can if you deposit $50, it's $50. There's no fees on top of that. So I was
Wow.
like, okay, let me try that. So I downloaded the Coinbase app at the time, bought $50 of Bitcoin, sent it over. And while I was doing that, I was like, okay, there's some other options here. Back in 2017, there weren't that many coins that Coinbase was offering, but Ethereum
What
was one
year?
of
Sorry, what year did you say it was?
2017.
Okay, yeah. Okay.
So
Pretty early.
yeah, so then I was like, okay, let me just buy $50 worth of Ethereum while I'm buying $50 of Bitcoin. So I sent the Bitcoin over. I probably lost it in like the first couple weeks, right, of sports betting, but I left the Ethereum in the Coinbase app. I didn't even touch it for months. This was like probably early, like Q1, Q2, 2017. And then around like September, October of that year, I decided to just go into the Coinbase app and see what was going on with it. And that $50 of Ethereum had turned into 800. So you're talking about
Jeez.
a matter of like 6 months, right? It
Hmm.
went up that much. So now you start to get really interested. And you're like, wait, how is this even possible? Because I cashed it out immediately and I sent it to my bank account. Now it's like real money that I went from $50 to 800. And so now you're like, okay, there's actually a way for me to make money off of this, right? So I kind of let it sit, but then December of 2017, if you guys remember, uh, Bitcoin's price went from 10K to 20K in a matter of like 3 weeks.
Hmm.
And so that's when you're like, oh, okay. So now I missed out on a little bit of the, like if I had sold it in December, January timeframe, that $50 would have probably been like closer to 2,000, 2,500 because of the parabolic rise at the end of the year. But because of that rise, now I'm like, okay, now I got to research and figure out what's going on here, and try and see if I can make more money. And that's when like all these retail participants come in. And at the end of 2017, money's just pouring in, right? Like all these coins are going crazy. I think like uh, there's like this famous segment on CNBC where they're like, how do you? They're walking you through how you can buy Ripple, the Ripple coin XRP.
Hmm.
Like what do you do to buy Ripple? And this is like it was like at the 3.8 or $4, and that was literally the peak of that price. And the coin has never gotten back there. But CNBC is walking you through how to buy it, so you know like the how crazy things kind of got. So that's when I started putting in money at that point, which obviously didn't turn out well at that point in 2017. but it got me involved to a point where I was like, okay, now I have skin in the game. And it basically through 2018, my portfolio was going down in crypto, but my uh, interest kept going up, and my uh, like I was just so interested in getting involved and understanding what was going on. Before it was like, let me just throw money at it. It's at 20K. It's going to go to 40K, 50K. So let me just throw money at it and see what happens. But now that I had skin in the game, I was like, let me learn a little bit more about what's going on here and figure out why people are interested.
You know, one thing I remember, we were in Vegas once and you were trying to pull cash out of your bank account, and literally the bank was like, you cannot pull your cash out right now.
Yeah,
Like,
right.
what was the reason they told you? I can't remember. What did they say?
I think it was because it was in a different location than like my home base, right? And it was
Yep.
more than I would typically pull out. Like I'm not pulling money from an ATM basically ever, right? And now
Yeah.
you're in Vegas trying to pull out whatever it was, like a few hundred dollars.
It probably tripped some algorithm that was like, oh, this person is in
And
some
I
of
And
think
the.
it
what's
was like subsequent withdrawals too, right? So it's
yeah.
like,
And
okay,
what's
now you, yeah,
Yeah, it was subsequent withdrawals in the same day, whatever. It's your money though, you can't pull it out. And this is getting to a question, by the way, but it's
yeah,
like, it was crazy because you were like, well, this is ridiculous. It's my money. I can't do what I want with it. So that was in a way like, hey, this wouldn't happen with cryptocurrency. So to me, there's the value proposition side of things, which is this can be used as a way to kind of get around the banking regulation that we have that's kind of ridiculous. There's also the other side, which you're framing in the beginning of the conversation, which is this is a pure like investment, right? This is something I want to invest in because I think it's going to get more valuable because in a way, other people are starting to realize it's investable, and you're doing it really to get back a higher like dollar basis. At the
right,
end of the day, you're trying to invest in Bitcoin or in
right.
Doge or whatever it is to try to sell and get back dollars. So like how much in your mind right now is, I think it's about the functionality and like the use case of these things versus like you're doing it because it's you think you're getting on the train early enough to play the game right and like make money, dollar money off.
Yeah, that's a good question. So I think like from the story, it was a lot about speculation, but what's kept me around, it's been what 6 years, 7 years now, right? That what's kept me around is actually that what you're describing is this ability for me to self custody my funds. I can be my own bank with crypto, right? So there's no middleman. No one's saying like you cannot move this money around. Why do you need to do it? Give us some documentation about what this transfer is for, et cetera, et cetera. I'm in charge of everything. And of course there's like this uh, there's a risk there, right? That you have to manage your own funds. But at the same time, I feel much more confident in having the funds under my control than under anyone else's control. And I think that thesis is playing out all over the world right now, where it's like there are a lot of countries that have a ton of inflation, right? Like you cannot hold like I think Lebanon is one of them that has like insane 1,000% sort of inflation on their currency. So it's like I cannot hold the local currency there, otherwise my purchasing power just is decreasing every day, right? And so from that perspective, you can really see why this would be valuable. I think a lot of people here in the U.S. find it difficult to fathom like why do we even need this sort of thing, but the use cases are playing out all over the world where when your currency is inflating and you don't like your purchasing power goes down day by day, imagine being able to put it into even a USD that's on crypto rails from anywhere in the world and hold the world's reserve currency in your wallet as opposed to having being forced to hold your nation's currency, right? So there's a
But
lot of yeah, sorry, go
don't
ahead.
you see the opposite problem though with crypto where like that ticket you bought, that or that bet you made for $50 in the beginning, suddenly you had actually made like $100 bet, or you maybe if you calculate it now, you made like an $8,000 bet on that stock
Yeah.
because it's not stable enough to consider it. It's almost deflationary to spend it, where you're like, I don't want to spend this because I think it's going to be worth more. To me,
Well,
it's not.
that's a difference between like holding Bitcoin, which is super volatile, right? But crypto has different coins, right? One of the coins is USD, like it's called USDC, which is USD coin. So it's
Mhm.
like a one-to-one backed crypto coin that if you have $1 of that, there's $1 that's in a bank somewhere that's backing that coin, right? So you
Mm.
don't necessarily have to go to the volatile crypto coins and hold that, which I get what you're saying. It's totally true. Like if I think Bitcoin is just going to go up and to the right for the long term, there's honestly no reason for me to sell it, which makes it not necessarily a great currency, but it does make it a good investable asset, right?
So one thing I wanted to do was maybe just take a quick step back, because you had mentioned earlier that you went from being somewhat speculative, right? You were a speculator a little bit,
100%. Yeah, at the
but
beginning.
then you had this transition where you turned into more of wanting to learn about the underlying principles and technology and those kind of things. What did you learn?
I think there's a lot of technology involved, right? So that's one of the things that I think drew me in quite a bit. And once you get past Bitcoin, so Bitcoin is basically a currency, right? It's like a hard currency. It's like a digital gold is what people kind of describe it as. Once you get into the other ones like Ethereum, Solana, these sorts of coins, they have like there's a software layer there, right? Which is going to appeal to me a lot because I'm a software developer. I've been coding for dozens of years now, right? So it's like that aspect of it where I can start building applications on top of blockchain, uh, understanding a little bit more about how some of these, like what they call it a smart contract, which you can write a piece of code, deploy it on the blockchain, and interact with that piece of code. It's called a smart contract. So it's like starting to read into what other people have done, write some things on my own. That really led me down this like rabbit hole of saying like, hey, this is like a pretty transformative technology that I'm like getting more and more interested in.
So what makes it so transformative? I think a lot of people struggle to understand the technology aspect of it and what makes it so different from the way things work with your regular money or with your regular bank.
I think the biggest thing is like public versus private, right? Like permissionless versus permission. So like if you if you log on to Twitter, let's say you have your Twitter profile, but all that data is owned by the corporation, right? Whereas now with say Bitcoin or Ethereum, everything is public. Everything is known to everybody else. So everyone is kind of verifying, like if you're like a Bitcoin miner, right? You're verifying all these transactions, and anybody can plug into the network and become one of those validators for the blockchain network, whichever one it is, and you can help secure it by being a validator like that, right? So now all of this information is public, and anybody who wants to be involved can get involved. So it turns it into like a completely decentralized network where no one entity can control a large portion of it, right? So if one entity goes down, if one validator goes down, it doesn't actually make any difference to the network. The network can keep going, right? So it's if that's like one of the main features of blockchain that allows anybody to operate it.
And how is that a contrast to maybe how the regular, I don't know, banking system or regular systems generally work? It sounds like it's decentralized, and so there's some resiliency there versus being kind of a single entity.
Yeah,
Yeah.
maybe
So
Viv's
that
what you're
yeah.
asking to me maybe is like what harm are you preventing by having it be decentralized? Is that kind of what you're saying, Vivs?
Yeah,
Yeah.
similarly, yeah.
What harm are you preventing? You're
Yeah, like
basically
what is it solving to be decentralized?
yeah. So that's like a lot of decisions. Like say let's just take a bank for an example, right? A lot of the decisions that the bank makes are confined to a few people at the top, right? So these people, the executives, are making decisions on behalf of all their customers, right? Whereas here with a more permissionless network, anybody who's involved with the network can help make decisions for it. Now you can say like, okay, that's going to be a lot more inefficient, right? Because having that many people involved doesn't necessarily may not make for the easiest decision making process, easiest way to make changes. but I would argue that that actually makes the network even more resilient, because uh, you need a lot more people on board to make changes to it, which is why actually the Bitcoin network in general hasn't changed that much in the last 15 years, because you need a lot of consensus to make any sort of change. And so once you start off with something really solid, you start out with a really solid foundation. Any changes you want to make to it have to be approved by quite a few people to say like okay, let's make a make a big change like that, right? And so it's a little, I
What's
would
an
say it's a
example
little,
of like
yeah.
a what's an example, just a theoretical example of um like a banking related change that someone at the top would want to make, and how that would work and impact the consumer, versus similar thing in crypto and
Hmm.
similar thing on the blockchain.
I think there's a lot of like middle management stuff where it's like simple example of me wanting to transfer like $10,000 from one bank account to another, right?
Hmm.
All of a sudden, that's setting off a number of different flags that you need to pass certain checks and get approvals for. Like I was saying, it's my money. Why do I have to worry about that, right? But with this sort of public ledger where like the rules are all codified in code, you don't have to worry about any of that, right? Like all the rules and regulations are set there, so
So
I
it
can
sounds
just
like it's
make the
almost like
transfer and be fine.
the rules are set by the network, or by the network of Bitcoin uh, people, I guess, and versus like the regular bank, they have like a strict regulation, like we can't transact anything over 10K, or they might have this like blanket rule that prevents you from doing what you want,
Right.
versus a decentralized network, is a bit more free. It's a bit more open,
It's a
so
bit
you
more
can.
free. You can still have certain rules around what is possible and what can be done. But yeah, in general, it's more free. It's more open. You're not going to be subject to uh, changes on the fly, right? Like your bank could change uh, anything really. Like even like the interest rate that you get on your savings account will changes
Yeah,
month to month, right? Like
right.
that. Nobody's giving you any foresight into those changes, right? It's more, this is what we're going to do, so you have to live with it. Whereas
Yeah.
everything is codified there on the
To me, I
Bitcoin
mean,
blockchain.
there's some pretty clear ones on like the money transfer. Like, how do banks make a lot of money? Well, a lot of it's on taxing money that's sent from one place to another and being the
Yeah,
middle person on that transaction. So it's like, of course, banks don't really like this because they're being taken out of the middleman position in a lot of cases, and the money is now, I think, less frictionful in that it's going
Right.
straight from one party to the other. That's also probably bad from like a legal perspective, because the legal arms like to be able to look and say, hey, where was this money from, and how did you get
Right.
this money, and why is it going here? So like, I think one big argument for crypto over time has been, well, this is great, it's more free, but is it just enabling all the bad actors to sort of transact and be without oversight? And it's, these regulations sort of exist for a reason. And is it, do you have to sort of buy into the fact that people should, it's their money, they should be able to do what they want with it, sort of regardless of origin? And a lot of these regulations really shouldn't be on the books, and they shouldn't be taxing people's exchanges in the way that they are. Is that kind of the mental framework?
I think so. I think so. I mean, at, to a certain extent, you need those regulations, right? Like you want consumers to have confidence in these institutions, but there's a whole set of people who want to break away from that too, right? And that's like fewer regulations, a little bit more freedom. I want to manage my money the way I want to manage it, right? And actually, just to put a point on this, like one of the biggest arguments against Bitcoin or crypto in general is that it's used for so much illicit activity. But because the blockchain is public, everything you do is recorded, and everything you do can be found out, right? So these agents, like these federal agencies or police uh, uh, doing investigations, want you to use blockchain because it's so much easier for them to figure out what you're doing. Whereas if you use
Mm.
cash, there's no way for them to track it, right? There's no way for them to figure out where the cash is going or how it's being used. But on the blockchain, you can figure out this money was transferred here on this date, and that's recorded forever, right? So if you're a criminal and you're using the blockchain to do your transactions, it's actually you're actually being very, very dumb, and you're probably going to get caught.
Wait, so how does that work? Is it possible to anonymize and hold Bitcoin, or do you have to? Is it attached to your name, or how does it work?
It's not attached to anything, but it's very easy to see like where the transfers are coming from or where they're going, right? So technically, when I create an address, it's an anonymous address. It's not attached to anything, but you can start to put these pieces together and be like, okay, this transfer came from a Coinbase account. So which Coinbase account did it come from? This transfer then went to X address or Y address, and like figuring out, you can put these pieces together and investigate it properly. You can figure it out relatively easily. And there are
like within
ways
the network. Go for it.
I was going to say there's ways to anonymize the transaction such that you don't know who's sending or who's receiving. But one of the systems for that was called Tornado Cash, which ended up being shut down by the government, because they're like, if we can't tell who's doing the sending or receiving, then this is clearly an issue for us. So we can't let this happen. So they shut that down immediately, right? But they're not shutting down.
There's concerns. There's concerns. Yeah. There's like money laundering,
right?
Like all these other issues.
But more the point being, like they're not moving to shut Bitcoin down, right? Because they know like we can read the blockchain. Like this is not a difficult task for us to do. But if you run it through an anonymizer, which Tornado Cash was doing, now all of a sudden we have no idea. So they were really quick to shut that down, right?
How? Let's say you wanted to shut it down. Like, could you? Like, how would you do that?
I don't think so. I mean, a large percentage of miners are in the U.S., but if you said, okay, you can no longer mine Bitcoin in the United States, all they would do is pick up their mining rigs and move it somewhere else, right? Like China did that. They banned Bitcoin mining completely, and all those miners just moved to the United States, right? So it's very easy for them to just move locations, which makes it even more resilient.
Would it be a form of attack if the U.S. government like spun up 50% of the servers to live on the blockchain? Like, is there a way to prevent that for the government to own more than half of the decision making?
I mean, buying up the supply could be a way to do it. They could do the mining thing as well, but it's not really stopping. I mean, they have the power to do it. That's for sure.
They kind of don't. I guess you're saying they don't want to. Like, there's no real incentive.
Yeah,
they're
no
like
incentive,
actually able to use
unless
it and track
they actually wanted to destroy it. You can do it that way, yes. But
so maybe maybe we can change gears a little bit, which is, I think you currently view it as more of an investing strategy, right, for your personal portfolio, and that's like, what's your strategy right now? Are you Bitcoin heavy? Are you like spread amongst a lot of the different coins? Like, how are you figuring out how to distribute the money?
Yeah, I'm spread across a lot of different things. I'm actually, my percentage of Bitcoin is fairly small in comparison to the rest of the portfolio. So like I'm pretty heavy in Ethereum and Solana, and then there are smaller percentages for a few of these other blockchains. I would say like 2/3 of my portfolio is Ethereum and Solana, and then maybe 10 to 15% Bitcoin, and then the rest of it is a few other smaller chains.
And like, how have you decided that allocation? Is that based on something you're seeing coming up with Ethereum and Solana that's making you more bullish?
I think in general, so the crypto ecosystem kind of operates in cycles, and they operate in 4-year cycles. Okay, so every 4 years, basically, there's, I don't know if you guys know about like the Bitcoin halving. So essentially, like the rewards that the miners receive for validating the network cut in half every 4 years. So the supply essentially decreases.
Okay.
And so every 4 years, we kind of have this like parabolic move up, followed by a year or two of down, and then it kind of comes back up again. So it's like very, very cyclical. So 2025 is supposed to be one of the years to have an up move, essentially. Okay, we had it in basically 2020, 2021 was the last up move. Last couple of years have been down. 2024 has been relatively good, and 2025 is supposed to be the up move. So for me, how I'm thinking about it is less long term. I'm more thinking about the next 12 months. And in the next 12 months, the higher rate of return will be on the smaller assets, not necessarily Bitcoin. So like Bitcoin is at 100K now. The upside is maybe another, 50%. Whereas with Ethereum or Solana, I could see upwards of like 100 to 200% over the next 12 months.
Got it. Now, again, we talked a little bit about regulation, how Bitcoin is somewhat immune to it. Hard to take it down completely without doing something pretty drastic. And it sounds like and just switching gears into politics a little bit here, the last administration seemed to have a lot of detractors in the crypto community because, from what I understand, it's almost as if they were targeting crypto as sort of this negative thing, or maybe they were beholden to the bank or something like that. Can you talk a little bit about that, or do you have any sense for that? And then, what do you think about this new administration coming in under Trump?
Yeah, so there were a few people who were huge proponents of bringing crypto down. One of them being Elizabeth Warren. So one of her like campaign promises almost was she was going to create like an anti-crypto army. Okay, and to whose benefit, I'm not really sure. I think she was very much focusing in on the scammers and how they were defrauding a lot of investors, but it wasn't anything like, if you looked at the facts, it's not like it was happening more so in the crypto industry instead of like traditional finance, right?
Yeah.
Similar numbers you're going to find in any sort of financial instrument. So she came out like aggressively against it, and she got the chair of the SEC, Gary Gensler, on board of that train. And so they've spent the last 4 years going after companies, and not necessarily. So the SEC's sort of framework has been, we're not going to give you any sort of regulation around how to operate properly in the US. So if you launch a token, these companies who are launching the token will go to the SEC and be like, hey, I want to register with you, right? To make sure I'm doing things properly. The SEC will say, we don't actually have any laws or rules in place, so we can't give you an answer on how to properly register. So the coin company is like, okay, so what do? They don't have an answer, so they go ahead and launch. Now, once they launch, the SEC is now coming after them saying, you didn't follow the rules. They're like, what rules was I supposed to follow? And they're like, sorry, we're not going to tell you what the rules are, but you aren't following them, so we're going to come after you anyway. So now they're filing lawsuits against these regulated companies. By the way, Coinbase is a publicly traded stock. Okay, they didn't go after them when they went public, but now they're going after them afterward, right? And all of these cases, they've gone after Coinbase, like Uniswap, Kraken is another exchange that they've gone after. All these American companies who are trying to abide by the law, they are going after these companies, and the companies take them to court. The court shoots the SEC down. So the SEC is losing in all of these cases, saying you guys aren't operating in good faith, but they're just continuing to go after these companies. So now you can imagine, as people who are their lives are focused in this industry, to say, what the hell is going on here? Like, you guys are coming after us. You're not giving us a proper framework. Like, what do we do? So that led to a huge wave of folks supporting the Republican side, because not only were the Democrats coming after them, you have Trump on the other side saying all these positive things about Bitcoin and crypto in general. He's launching his own NFT collections. Like, you can say what you want about whether he's grifting or whatnot, but he's clearly in support of the industry as a whole, right? So if it's my livelihood at stake. I have a company that I'm trying to build. My family is being supported by this. I have one side that's coming after me consistently, and the other side who's embracing me, saying, come over here, we're going to give you better regulations, we're going to tell you what you need to do to register with us, we're going to give you better laws. Where do you think people are going to gravitate to, right? And there's a lot of money in the space. Like Bitcoin by itself right now is a $2 trillion market cap. There's a lot of money in the space that people were able to throw around. And I think there was a super PAC that was created that was specifically uh, trying to back crypto candidates, and they were, I think, one of the top donators or top donators of the last campaign in terms of giving money to pro crypto candidates. They're not necessarily pro Republican, but they're pro crypto. It just so happened that the Republican Party is more pro crypto than the Democrats.
And it sounds like a crusade without a real cause. Like
Yeah.
what's the
Yeah.
what's the purpose?
It doesn't make
the
sense
purpose
to
of
me
this?
because it's like, what's the upside? Like you're antagonizing an entire group of people to what end? Like, what are you trying to gain from this? Like, there aren't people who are there. There's a very small segment of the population who's like, I want you to go after the crypto community because they're scammers and not blah blah blah. But that's not enough to move any sort of needle. You know what I mean?
Yeah.
So,
And I think like the other piece of it is that that I heard recently, and listening to the Rogan podcast with Mark Andreessen, he was saying that a lot of their crypto founders were getting
right.
debanked, like they were, which means that they basically were shut out of the regular financial institution that most of us need to operate on a day-to-day basis. And the outcome of that is like they can only operate with cash. They can't go to a bank. They can't have credit cards. They can't make purchases without like having cash or something like that or equivalent. And so, yeah, which is like, is that true? Like, what actually happened? Do you know anything about that?
Yeah. So a lot of people have come out now saying that they have been debanked. Essentially, like I think if you guys remember the Silicon Valley Bank situation where they essentially went under last year, there were a lot of crypto companies there, and there was another bank, I forget the name, but they were attacking the banks because they didn't want them to provide funds or provide services to crypto companies. And a lot of stories have now come out saying, yeah, we were part of that. And you try and register even as a bank, you try and register and say, I'm gonna help crypto companies. Nobody was buying it on the government side, on the federal side. So even as a bank, you had a lot of trouble getting the licenses you needed to operate as a bank for crypto companies.
So with the new administration coming in, is what you're hoping for just more like clear-cut, sort of defined regulation, predictable regulation on these companies, which will then sort of open up the market both for more companies to start because they'll know what to do to start, but maybe also even open up the number of people who are going to be able to buy and sell crypto, because now there's going to be more avenues for like maybe a crypto
Correct.
credit card, maybe a crypto bank account. That all seems like if that happens, like you should be very bullish actually, because there's millions and millions of people who haven't known how to transact, probably don't even know about Coinbase. Like even I frankly don't have a Coinbase account. I don't know about how to buy it there. And like if more people just enter the market, I would expect things would rise, more money would enter the system.
Absolutely. Like a lot of these companies, like if I'm a crypto company, I almost certainly have to exclude US residents from using my service because I can't register anywhere with the government. And so a lot of these companies will say, like, if you're from North Korea, Syria, Iran, United States, if you're from any of those countries, you cannot use our service. Now, you see, like, what's wrong with that list?
Wow.
Like, why should the United States be on that list, right? And you see that all the time with different crypto companies because they just can't operate in the US because there's no regulatory clarity. So now this administration is filled with pro crypto people now, right? Like all the different nominations that he's proposed have folks that have been outspoken about crypto being something that should stick around and should be like we should allow it to exist, right? It's a new technological innovation. Let's not get in the way. Let's just let it thrive, and we should be the number one country where it thrives.
So the question then, it seems like these are always kind of the, I don't know, inflection points in things where like suddenly something gets unlocked and then now it's allowed, and almost like the tech has been ready, but now it's allowed. I'm curious if you have a couple thoughts or examples of like the types of companies that once you get a US base of money flowing into, suddenly in like 2 years or 3 years, we're going to be looking back and be like, of course that thing thrived, or of course that went up 8,000% because suddenly like this was legal and it wasn't before.
That's a great question, actually. So there are a few companies that are kind of the base layer of transacting in crypto. One of them is Uniswap, so which allows you to essentially exchange from one coin to another. Okay, and this is like foundational technology where if you didn't have this, you wouldn't be able to transfer coins self custodial, right? So this basically means like I create my own wallet, I send money to that wallet, and now I can go in and exchange to any sort of currency that I want. Okay, that technology, that company is called Uniswap, which is based in the U.S. but getting hammered by the regulators. They've been in lawsuits for years, and so what you saw, they have a coin, the Uniswap coin, and what you saw was when as soon as Trump got elected, that coin went nuts, right? Because now you're saying, okay, regulatory clarity, we're not going to be sued, we're going to be able to operate where we want to operate, and that gives you a lot more confidence in the coin's price going up. Now, whether or not that coin like derives value from what the company is doing is up in the air, but that sort of thing is what you can look into and be like, okay, these are the types of companies that will do well.
And just to recap a little bit, it feels like at a high level, we may not see a lot of demand or excitement around crypto in the US because we actually have a fairly stable, like where the stable currency in the world is the dollar.
Right.
And there's quite a bit of, at least the Elizabeth Warrens of the world are out there sort of railing against it for similar reasons to why you would rail against the financial industry in the first place, which is that there's there's some fraud going on. People are, they have schemes going on that are defrauding people, but it doesn't seem to be any higher in crypto than it is in any other financial product. At a high level, the excitement around crypto has probably gotten higher because now with the new administration, there's a set of people in power who are pro kind of crypto and kind of being, in many ways, kind of pro anti-regulation, pro freedom, for people to do what they want as it relates to business and with their money. So I guess given all that, like, what do you see as the future here? And one other thing I'll mention is that it was recently announced that David O. Sachs is going to be the crypto and AI czar under the Trump administration. So what's your take on the future here and some of those things?
Yeah, so I think in general there are a lot of very smart financial people that he's nominated, that he's brought into his inner circle. So I think the next 4 years will be critical in terms of establishing proper regulation around what cryptocurrency means in the United States. And hopefully that can lead to a framework that lasts for decades. One of the things that's been proposed, which would kind of be like completely game changing, is there's a senator from Wyoming, Cynthia Lummis, who has put forth this bill for a strategic Bitcoin reserve. So like the United States currently has a gold reserve, but to do something similar for Bitcoin over the next 5 years, if this passed, they would buy upwards of 1 million Bitcoin to store in this reserve, with the eventual goal to use that to pay down the debt. Okay, so if this were to pass, that would change the entire game to be like, okay, now the United States government is saying this asset is important enough to put on our balance sheet. Everybody in the world, every country in the world is going to follow, right? To say we need to get on board. We need to front run this. We need to buy as much as we can. And that'll lead to, I can't even imagine what sort of price you would see if that were to happen. But just the base case of better regulation, better frameworks in place to allow for companies to exist is more than we've had for the entirety of crypto's life, essentially, right? And so that's already helping. You can see it in the price. Like as soon as Trump got elected, it went from 70 to 100, right? So you can see that the bullishness there.
Awesome.
I still feel like though, just in like, I don't understand what it's going to be practically yet. Do you know what I mean? Like, is it just that they're buying it to think it's going to go up in dollar valued terms? Are they making like a speculative bet on something? Like to me, the way that I've thought about it, but probably the most insulting way to think about it is, oh, they could just bet on trading cards, right? And they're looking at this trading card market and they're thinking the trading card's going to go up in value. And so they're investing in it now because they're making a speculative bet on the value of trading cards. But those trading cards don't do anything practically for anyone. People just value them because they value them. Like, I'm wondering if you look 20, 30 years forward, are you seeing Bitcoin or whatever it is as like, do you think it's going to become a tradable, like a currency type commodity that we're actually going to be trading? Or is it just something we continue to look at as like more of an investable asset? That
I guess do you mean is it going to become more of a currency where people can use it
to transact?
To transact.
Like they'll actually be using it to transact, or does it remain this? It's only rising because people think it's going to keep rising.
So I think the best corollary to Bitcoin is gold, right? Like gold's price has continued rising, but really what's the use case there, right? It's like an investable asset that you kind of put your money into thinking, it's continued to go up for hundreds of thousands of years or whatever. So I'm gonna
in many ways it is sort of like Arvind said, it is sort of like people like the way it looks. It's like a jewelry. There's also practical applications.
Transacting.
No,
there's practical
gold,
applications for it.
So the reason people got to gold, right, gold and silver specifically, was if you look at the periodic table overall, like there are very few stable, heavy metals that you could actually make into coins, while also easily being able to test and understand if they're pure or not. Like there's almost no, like you can't, the Planet Money did a great episode on this, but it's not like I could go take helium gas and make it a currency. Like it's going to leak. Sure. There's a lot of other problems. Iron rusts and you start to lose value. Like you need a noble metal. You need a specific type of metal that can retain value through any sort of chemical process. Very malleable also to form coins. So there's a lot of reasons that people in the past came to gold. Now I agree with you. What's interesting, I'm thinking now is like actually Bitcoin in some ways you could relate a lot of it to gold. Like there's a set amount. There's not an infinite quantity of it. So there's a limited quantity and supply of it.
It's difficult to mine.
It's difficult to mine. At this point, it's difficult to mine. But funnily enough, a lot of that was created now artificially through the Bitcoin network. Like it's been maybe gotten large enough for it to be recognized as the artificial gold standard in a way. But I think the case you'd have to make is that it's big enough. It's just gotten so big that you can't look away now. But I don't see like a reason why there can't be 10 Bitcoins replicating what Bitcoin's doing and sort of invalidating that it's the gold standard, because there can't be 10 golds. There is only one element of gold. And that's where I kind of don't understand the
Well, I think, protection. I mean, at this point, it's like longevity is there too, right? Like it's been around since 2009 and the network has never gone down. It's operated exactly as it should. Every 10 minutes, there's a block that's mined, right? And so the longevity of it basically ensures that that's going to be the currency, right? Like I understand, like you can say, well, even now there are thousands of currencies that have come about since Bitcoin was born, and none of them have come close to challenging it, right?
I mean, another case is that like on the gold side, there's a kind of alloys now that have a lot of you can make similar properties of gold. with other materials
Like
potentially.
rare earth metals,
Yeah,
right?
like maybe like you make alloys or with metallurgy or something, you can make other things that are like gold. Um, but that doesn't make gold disappear, right? It's
Mhm.
just known.
Gold,
It's
yeah, I
like
mean, gold has that incredible longevity, right? Like that's also what helps gold stay at the top. Whereas now Bitcoin, every year that Bitcoin exists and stays as the number one cryptocurrency, gives it more and more credence to stay there, basically, right? And so that continues to help it. So to your question around like whether it will become like a currency, that's kind of up for debate because especially in the United States, like there's no reason to use it as a currency when you can just swipe your credit card and be done in half a second, right?
but
Mhm.
Like,
well, also there, if there was, like you said before, there are certain coins or cryptos that are more stable. They're not volatile, and they
sure, but
sort
I could
of
see like after like a 20-year mark where if Bitcoin is still around and chugging along, it gets to a point where it's like gold in terms of market cap and very much stable, right? It's not super volatile at that point, and you could use it to transact. And maybe for like really high value transactions, you actually do use it to transact because you have that permanence on chain to be like, okay, if I'm going to buy a house, I'm going to put 500,000 up. I'm going to use the Bitcoin to do it because now that proof is there on chain. I don't have to go through any sort of middleman, right?
you
Like
don't
I can
need
see
like
that.
escrow agents and all these
Yeah, yeah.
random things that you need
Exactly,
today.
right? Like you can take a lot of the fees out of that process and say just use this harder currency, right? So high value transactions I can see, but the problem with the network is that it takes 10 minutes for a transaction to settle, right? So if you're buying groceries, you're not going to use Bitcoin to do it because you're not going to wait there for 10 minutes
Mhm.
for this to settle, right? So that's where other blockchains can come into play, which is one of the reasons why Solana has become so big because it's super fast and super cheap. But that leads to less decentralization. There's fewer validators on that network. There are other trade-offs you have to make, but I could see that sort of chain being used as more of a day-to-day currency as opposed to Bitcoin uh, in the long run.
But why could you not have, the way Venmo works, where it's like almost entirely digital transactions on a layer until you want to pull your money out and then it becomes like a bank
Yeah,
layer?
totally,
Couldn't you
totally.
have a Bitcoin repository that funds a credit card where I have $10,000 worth of Bitcoin in a credit card? And as I swipe the credit card, I forget the background 10-minute transaction. It's just doing it against my
Yeah,
internal
yeah,
wallet.
yeah. They're actually trying to build that. It's called the Lightning Network.
Hmm.
They're trying to do that. It's just that they haven't had that much adoption. It just hasn't like once you get to the actual exchanging of the currency like in like a real world use case like that, it becomes a little tougher to prove out. It just hasn't caught on because you need like it's like a two-sided problem, right? You need the the users to use it, but at the same time you need the merchants to get on board as well. So
Hmm.
it becomes a little bit tougher to do. But they're working on it. So there's definitely possibilities there. It's just when will that reach sort of a more mass adoption is a question mark.
Part of me, and maybe one of our last points on this, but part of me just feels like if the crypto communities just did a better job of marketing, I feel like people would look. You don't need to understand all the like underlying BS. Like this is
Yeah,
money, you can use it. Like I don't know, just like do a better job of it. Just like obfuscating the complexity a little bit, um, and like don't call things weird names. Like I think there'd be a lot more potentially like viability to it in some ways.
yeah. That's fair, and I think it's you'll probably start seeing more of that with like the regulatory clarity, right? Because
Yeah,
you haven't necessarily had the option to market to the U.S. As much as people probably have wanted to. So like once you get clarity, all of a sudden that whole market opens up, and now you can start getting more targeted marketing material. You know.
Also, I suspect that as some critical like killer apps come up, with Ethereum or Solana, even the ones that are not maybe so investable based, but they're more like meant to be making smart contracts, as more of us interact with those things, then it feels like maybe the understanding will just grow. Like we use the dollar every day, so it starts to become really obvious why that's important. But I don't think I interact with the blockchain that much, or maybe I actually, and I'm not understanding it, or
yeah, exactly.
do I not?
That's where we need to go, right? Where it's like you download an app that's looks and feels like a Venmo, right? But you're actually the underlying technology is crypto, right?
Mm-hmm.
That's where things
Exactly.
You don't ask
get
questions. We don't need to know about that. Just like
exactly.
build the app.
You don't need to know, like we don't know how the banking layer works necessarily under the hood, right? It's just like know your money's there and it's going back to your bank account.
99.999% of people don't understand what the hell's going on when they swipe their credit card.
Yeah.
Okay.
Right.
Nobody fucking knows what's going on. I had to learn it because I was at Stripe, but like it's really complicated. It's not like a straightforward thing.
Yeah, for sure.
But most people, they just swipe and they move on. They don't ask all these questions about, like what's the underlying asset? Like no one asks that. It's just like a understood thing. It's easy to use. It's fast. You can get in and out. Like you pay once a month. Like
it needs
it's pretty
to have
straightforward.
like the equivalent of what end-to-end encryption is for like a Telegram or whatever. There needs to be some statement like that. Like you're going to make a transaction that's like way more secure than any transaction you'd make otherwise. And forget how we do it, to your point, Vivs. It's more just like this is maybe it's like a government unreadable thing or something. There's some statement like Telegram or Signal would make. This is an unhackable thing. That feels like a really valuable, I don't know, way for people to interact with it.
Right.
Start to be like, oh, this actually has real value. Yeah.
Actually, like how it's gotten into the mainstream recently is via like memes. So like memes are like universally known, right? Like everybody knows certain memes, right? And that what they've done is they've kind of financialized that and turned them into coins. So you can buy a fraction of a particular meme that you think is super valuable, right? And all of a sudden you can start to kind of speculate on that. And that
this is like the dog whip hat.
Yeah, exactly, right? So it's like it sounds stupid on the surface, but it's bringing a lot of people into this ecosystem, right? Because they're like, hey, I can like I kind of know this meme space, and now I can speculate on that a little bit. And how do I do it? Oh, actually, most of the activity is on Solana, so they're getting in there, and you have to buy the Solana token to buy these meme coins. So now all of a sudden, the Solana token is going up, right? So it's like the mainstream folks are coming in via that angle, and the hope is they fall into the rabbit hole similar to how I did, where it's like, okay, I start to understand what this is all about a little bit more and get more and more involved, right? Like you need a way to hook them, and then I think there's a lot of benefits to the technology that'll keep them here.
Well, regardless of if we get super involved and invest and do all the like build new products or whatever, it's been super fun to watch. I really like, and a lot of people's livelihoods have been at stake, and that's why there's been this sort of seat change and people wanting a different policymakers and everything like that. But it's been a really, really fun space to take a look at and watch and understand and try to grapple with. And I hope we keep doing it. But I think we're pretty much at time. Let's keep the conversation going. Like we can do another session at some point and catch up when Bitcoin hits 200K.
I think the next 12 months should be fun. So we can do it again.
Yeah, you got to tell me when to sell my Dogecoin. By the way.
Sounds
critical.
Sounds
honestly.
Good. You set up the sell, right? At $1.
I didn't do that yet. I'm just checking it randomly. You think I should set it at $1?
Not all of it, but some of it. Yeah.